Hello, Wolfpack, back with another general market update here. And, what can we say? We're correct, broke out to the upside, as expected, according to the cyclical theory, according to our predictions for months. In fact, we predicted this even before we topped out. So, look, I think the overall lesson from this retest of 60k and the constant retest of 60k is, trust in the cyclical theory. The cyclical theory is completely overpowered in measuring what's actually going to happen next, especially in peak bull markets when technical indicators aren't exactly as reliable as they should be. But, even the technical indicators look good, right? We had compressing Bollinger Bands, which suggested a sharp move. And if you go to the hourly chart, you can see we've had a pretty bloody sharp move. So that's played out, and we've got that playing out over the next few days. We've got a bullish MACD cross incoming within the next day or two, provided we continue this upwards trend and it is a massive fake out, which would further drive the price up to new all-time highs. And we're moving upwards from a flat line on the stochastic RSI. We've flipped the SMAs, we've flipped the POC, the point of control on the volume profile, which is a major support zone that is indicated by the amount of buying pressure in that region and selling pressure. So everything looks really good to continue to new all-time highs. The cyclical theory suggested new all-time highs before November the 16th. So provided we reach all-time highs within the next 8 days, which I think is very, very likely, that looks good. And, if we take a target from this actual whole triangle structure and apply it to the breakout, what we can see is that the target for this breakout is actually going to be, and we'll say the breakout happened today, actually. The breakout target for this current breakout, we don't have a date range for it, but is 76k, right? 76k, and we'll get into another target in a second, and this is coming from the bull flag that we saw here just earlier in this month, right, and into late October. So we can take a bull flag estimate from the bottom here on September 21st, reach it all the way up to the top of this flag, and apply it to the breakout point, right? And what this actually does, and let's actually move it down to the retest just to be a little bit more conservative. It measures that by November the 30th, right? November the 30th, we should be reaching 86k, which goes perfectly in line with cyclical theory, right? Mid 80ks is what we were expecting always from November, according to the cyclical theory, to reach our price target, our ultimate price target of 113k by January the 6th. So I think low to mid 80ks by the end of November seems actually pretty reasonable if you're considering peak bull market behavior. That is about, let's actually measure that from current prices. That's about 33% away, and we've got about 3 weeks to reach that price point. I think it's very achievable, especially considering November is meant to be the most bullish month in cryptocurrency market cycle. So mid 80ks, I'm not going to say 89k exactly. I'm going to say mid 80ks, mid to anything in the 80k region by the end of this month is what we're actually targeting, according to the TA and according to the cyclical theory. And I think that's very likely, right? I think that's very likely. I will say that if you're really, really, really conservative, I would be waiting for a daily close above 63.8k, because 63.8k has acted as a resistance on multiple occasions, right? It acted as support here, resistance here, resistance here, resistance here as well. So if you're really, really, really conservative, wait for a close above 63.8k. You're not really going to be missing out on too much, because Bitcoin has actually stolen the spotlight, and so altcoins will be, not really performing as well as they might seem to on paper, right? Because keep in mind, guys, and we'll get into this in a second, but we are following the market cycle theory, and hence since we're following the market cycle theory, we are following the market cycle theory on Bitcoin for what happened in 2017. And what happened in 2017 was flattening out in September, moving up briefly in October, coming back down in November, and then moving up again towards December, right? What we've seen is flattening out until September, moving up in October, coming down briefly in November, and moving up until December. So we're expecting a move upwards on Bitcoin dominance, right? As Bitcoin has its last final push, which this is what it is, right? We've got about just under 2 months left, and Bitcoin's going to be having its last final push, right? And as that happens, Bitcoin dominance is expected to rise like it did in the last cycle, and I'm thinking it's going to top out anywhere between 52% and 49%. Sorry, for 49% to 52%, it will rise. So altcoins, they're not going to not move; they're still going to go up. Altcoins still have very bullish months in November. It's just going to be relative to Bitcoin a little bit less, and typically what we see is that some altcoins like Litecoin, for example, which is one of them that moves with Bitcoin, tends to take the lead from now until the end of Bitcoin's run. And then after Bitcoin tops out, we see the vast majority of altcoins start to take the lead, right? So with Ethereum, because Ethereum actually tops out later than Bitcoin. So some coins run with Ethereum, some coins run with Bitcoin. So that's worth keeping in mind and worth building into your portfolio management. But essentially, a little rise in the Bitcoin dominance until Bitcoin tops out is expected here. So let's keep an eye on that for sure. We can see that we're going in line for cyclical theory, right? Every kind of blue highlighted area is the Q4 pump we've seen in previous years. Extrapolating that data, we come to our price point of 113K by January 6th, and we're following that quite nicely, right? We're following that quite nicely. As for Ethereum, I mean, there's not really much to say. It's just kind of following what's happened in the last cycle. It's actually happened a little bit earlier this time, right? We had, we've gone over this so many times, but we had a bottoming out in July. We had a peak in around May. We had a peak in around May. We had a bottoming out in around July. Moved up, topped out in early September, bottomed out in late September, right? Topped out early September, bottomed out late September, and broke through in November. We broke through in November, and now this is the final stretch for Ethereum as well. It's beginning, right? And we're not expecting the super high volatility until Bitcoin tops out. When Bitcoin tops out, Ethereum should move at twice the speed, right? But right now it is just an uptrend on basically everything in the market, which is great to see. And similar to how we extrapolated the data for Bitcoin, we also extrapolated the data for Ethereum, and our price point for Ethereum is 9K to 13K by February the 3rd, right? February the 3rd, 9K to 13K. It's a little bit harder to be more precise. You will notice that on Bitcoin I said 113K, right? On this one I'm saying 9K to 13K because we just don't have enough cyclical data to take into account here. So it's a bit rough on Ethereum, but Bitcoin's a little bit more precise. So that's what we're looking at in the market, and the market looks good, everything is going as planned, and nothing has really happened that is so dramatically far away from cyclical theory that it's just like, wow, I've never seen this before, right? All of this has happened before. Even looking on, the weekly chart here, you can see that we always have a kind of sideways October, late in October, and then a downwards November, and then from that point onwards, it's kind of just straight to the upside. What we can note, and what we will look into in videos in the coming weeks, is the fact that this is actually what we've seen now in November, this correction, right? This 3-week long correction and consolidation is actually meant to be the last lengthy consolidation and correction we see until Bitcoin tops out, right? What we're going to see now is the occasional very sharp correction, right? In one daily candle, 2 daily candles, but we won't actually see any more, according to the cyclical theory, extensive consolidation or corrective periods. For now, it will either be strong up or strong down, trending to the upside, right? So I just wanted to clarify that because, there isn't really much time left in the cycle, and a lot of people get nervous about that and say, well, how are we going to reach 100K when we're meant to top out in early January? That's the reason. It's like we're not going to have any more extensive consolidation or corrections. It's just mainly going to be to the upside with the occasional sharp fake out. And what these are designed for, and we can actually go back in previous cycles quickly and just look at that briefly because it is important to note, right? And this is why I'd be staying away from leverage personally in these current times in the market, because we do have, like we saw here, right, in November, we had a sharp correction. We continued to the upside like we're seeing now. We didn't really have any more extensive consolidation, right? It was basically just upwards, but we did see a few of these, right? Look at this candle, this one daily candle here on November 29th. We went from 11.5K all the way down to 9K, right? Which is a drop of around, let's see, 21%, 20% in one daily candle. And what that is actually flushing out the leverage. Notice how it wicked very strongly to the upside, which flushed out the shorts, and then very strongly to the downside, which flushed out the longs. So if you're trading leverage right now, be very careful. Use low leverage because there will be candles in the future. Even though we're heading upwards, there will be candles that will try to flush you out of the market and get rid of all of that leverage, because too much leverage in a market is very unhealthy, and those institutions and whales want to flush out the leverage so we can move higher, essentially, which is good for the rest of the market but bad for you if you're using too much leverage. So keep an eye on that. Ultimately, we look good. Everything's still on track. Thanks for watching, guys. Hope you enjoyed. Catch you in the next one.